Good evening. Welcome to the ShadowTrader video weekly for Sunday, October 28th, 2018. The title of this week's video is Down the Rabbit Hole, and I chose that specifically because of the heightened volatility environment that we're in. Down the rabbit hole can mean lots of things, but most importantly, it usually means you're entering into some sort of an environment where you're not sure what you're going to get, where all manner of weird things can happen. And in the market, I define weird things as huge rip-your-face-off rallies that come out of nowhere, 100% retracements, and even though there may be a framework definition of some sort of a trend, within the framework of that trend, there's huge zigzags back and forth, and that's what we're getting now as vol has started to be elevated. So just to recap quickly what I was discussing last week about the H pattern, that is now completed. Remember, the H is completed once the low end of the post gets taken out. I will say that in the bigger picture, it does feel more bearish to me than prior H patterns, in that the sort of zigzag effect that I was expecting at the low of the post, where I thought we would actually rally somewhere in here and then come down lower, didn't happen. So the wild pattern of the back and forth didn't really happen. And a few days ago, Wednesday of this week, we actually had a huge rout that just took the market right down in here, and then we spent the last couple of days consolidating it, and of course Friday was a slightly lower low. So all that being said kind of points us in the picture of where we are currently on the weekly charts and where we're going to go, and I'm going to also talk a little bit about monthlies. So as you can see, the current sell-off has taken us right here to a very short-term trend line. I shouldn't say short-term. I mean, it's here from the lows. Actually, it's not really short-term. On the weekly, it looks shorter. But it's brought us to the uptrend from the 2018 lows. And this is really, really important, I feel, going forward, because we've already come down quite a ways. And if we look at, for instance, like a fib of the bounce from the low to high, let me just put this on right here. You can see that the key is that we've lost the 61.8. And I'm a big believer that once you lose the 61.8, and if you close a bar on that time frame well below the 61.8, you're going to go to the 100%. You're going to go all the way. So this is where I think the market is headed, is that it's going to go all the way. And this is why in the bullet points that hopefully you've read on our website where I post the video, I called this filling up the triangle, saying, will the SPX fill up the triangle? This is the phenomena that I call filling up the triangle, where you have the triangle here with the base being the start point of the prior low, and then the hypotenuse is actually the trend line, which touches the lows here, correct? And then the empty space is obviously the distance between that hypotenuse and the base, and we'll see if we can get down to there. Okay, the same situation is developing, of course, in the NDX, but it is a little bit, I would say, larger distance currently all the way down. So you can see actually tech could actually sell off quite a bit. This is the same February low in the same triangle. The triangle in the NDX is defined more by a breakout of the main channel here. And again, as I was saying, where does that lead us? It leads us to the monthlies, whereupon if you look here, this is actually very, very important. Notice that on the monthlies, I've drawn the trend line here from the entire rally. So when I say the entire rally, I see the rally from 2009, from the beginning of, from March 2009, which was the beginning of the rally. And you can see that actually moves out all the way to about the 2200 area. Now, I think we would have to have a serious bear move to take us down in there, but it is noteworthy to just understand that these things do exist. And if we were to take out the February lows, the market could actually go down there. But it's really doesn't, for short-term traders, it doesn't really pay to concern yourself with that just yet. What I'm going to be looking for, more importantly, is focusing on this 2500 level for a buy. And the reason I say that is because if I go back to this earlier analysis of the 100% retracement move from low to high, which would be this move here, the entire 2018 rally from the lows, it's very, very rare that you have 100% retracement and don't get a bounce. Plus, you've got the very psychological 2500 in the SPX just below it, so we may go just a little bit low and tag that. That could also be an excellent setup that could occur in the next couple of weeks, where we see a false breakdown below this approximately 25 2530 area, touch the whole number 2500, and then when we retest the 2530, then it's off to the races and the market should bounce at least, say, that first fib level, like a 38.2 or whatever. So that's what I'm kind of focusing on there. In the NDX, as I was saying, the situation is similar, but I did want to just show you the monthly. Obviously, a ways to go here, but notice that there's another trend line here in the NDX. So, here we're just now starting to break out of the channel, really. So the technical damage has not been that great, and the distance here to actually get down to the actual trend line, when I say actual, I mean of the 2009 lows to where we are, is really just a huge area. It would take multiple months to get there. So again, I'm not really focusing too much on that. All right, let's switch over to market profile for a moment. I'm going to give you just some nuances that I'm looking at here. This is Friday's action. You can see here first of all, I'll go back to these last couple of days here. This was kind of interesting in that we broke out of this large balance area here, and we broke out of it to the downside. And what I think is bearish, obviously the price action is bearish because it's moved down a lot, but is the fact that we never had value back up in that area. The value areas were clean to the downside, away from the balance area. We had 3 days of kind of trying to push lower, 3 sessions where the value was overlapping, and then on Friday we got the clean value again to the downside. So this is really, really important. You want to always be looking at where value is developing as opposed to price, because price will always tend to fool you. Remember that price acts like an elastic band, and it will pull and contract according to inventory position of the players. And if it gets too short, it will snap away from that level. And if it gets too long, it'll snap back down away from that level and come back more towards a level of value. And very often it will spend very little time at the extremes of where that rubber band is stretched, and it will also not trade much volume there. Therefore, that's not really value, right? It's not a fair price to do business, quote unquote. So we want to kind of pay attention to where the fairer prices to do business are all the time in the market profile charts, and that's what's important. In a bear move that is sustainable, you will usually see the value areas breaking away to the downside and being what we call clean, where they're separated from the prior day, as opposed to a move that might be kind of dying out. You'll see the value areas more clumped up, and they'll be overlapping. So that's what I'm seeing there in the profile. As these 3 days here were developing to the downside, I was noting to the readers of my pre-market perspective that the volume points of control were continually moving just slightly lower. Even though value was unchanged, I found it interesting that where the most contracts traded on that particular session was moving subsequently lower the next day, and then subsequently lower the day after that. So that was kind of a bearish sign as well, that we would get a little bit of follow through. One thing that I do pay attention to very much as well is where the market sort of finishes up the day in relation to the prior day's low. If it pierced in, notice that Friday was noteworthy in that we did come into the prior day's low, but we rejected back out. And you can see here in this overnight session, we're trading right at the Thursday low, kind of right at it. I'm recording this video at about 4:30 p.m. Eastern on Friday, so the futures just reopened after that 15-minute break. So that's all obviously noteworthy. And early next week, this is a key level that you want to be watching for. You want to be watching this roughly 2670 area here at the low end of that Thursday low, and see if we move back out of there or back into that area. All right, so that kind of recaps like what you need to know. Also, if you are interested in learning more about the profile, I want to remind you one more time that James Dalton is teaching intensives, which are month-long immersions in the market profile, and the next one is starting on November 2nd. Go to ShadowTrader.net and mouse over the market profile tab. There's a discount code there where you can get in a little bit cheaper. I think it's extremely worth it. You're paying like in the neighborhood of $1,000 for an entire month worth of watching the market profile throughout the morning sessions with Jim Dalton, who is really, kind of the master of this, the author of Mind Over Markets, et cetera, et cetera. So also, just to remind you as well, you may have already received an email from me regarding Monday at 3 p.m. Eastern. I will be hosting a free market profile webinar with Jim, and he's going to be talking about when momentum trading fails. which should be interesting. So again, 3 p.m. Eastern on Monday, and you should have the email in your box if you're watching this. If you're not signed up at our website, get signed up. I'll resend the email out on Sunday evening as well. So get yourself signed up for that because it is free and it is worth it. All right, let's take a quick look at some individual stocks. I wanted to just kind of look at some famous names that I think everybody is into, really. A lot of these FANG stocks and just tech in general just got absolutely destroyed. This Friday was really defined by Amazon and Google gapping down, which is really what drove the NDX so much lower and pulled the S&P with it. Other stocks as well. I don't want to just put it all on Amazon and Google. This was the heaviest week of earnings out of the season that just passed, so it'll start to taper off now after this. But certainly Amazon down 140 points, Google down only 20, but much lower. It was about 40 points lower at the low of Friday's session. But if you just look at the Amazon chart on the weekly here, I just want to show you guys like where I see supports coming in on some of these big stocks. So I figured I'd just start with monthlies actually on all these, or more actually just kind of stay on monthlies so that you can see just how overextended some of these stocks have become and how big the distance actually is between where we are and where the trend lines start to support. So look at Amazon. I mean, if you don't think it can come down here, well, technically it clearly says that it can. And notice that we now have a monthly bar developing that has obliterated like 4 months worth of gains, correct? This is actually 1, 2, 3, 4 months worth of higher highs here, and we've just obliterated it. So it's completely possible that another couple of months takes out some of this action and brings us more into this area, which brings the stock to about 1350. So with a lot of this space here being so big, not only in Amazon but in a lot of the other stocks I'm going to show you, you should probably realize that your best bet is just to time your buys with the support in the NDX and the SPX rather than trying to pick the specific bottom in some of these stocks, because to me on these longer term charts there really isn't support for quite some way. Of course you can always draw your trend lines however you want, use shorter time frames, say, oh well, I see a little mini trend line here and this is support and that's a support, but really I like to look at the larger time frame and see where we are and see if we're actually still uptrending, still downtrending or not, and where these support lines lie. So that's Amazon. Let's take a look at Google. I'll just go through some of the faves here. Google on the monthly has this space to come down. I would think that there'll probably be short-term support here, which is at the whole number 1,000. I've been talking that up for some time. If that ties in with say the SPX 2500, I think that's a very strong buy, would be the Google at 1,000. Facebook is very interesting because if you look at this monthly chart, it's actually right on support right now. So if the market decides to have a short covering rally early next week, I'd say Facebook would be a decent bet. You've got a good spot to stop it here under Friday's low because it is at that trend line support. Microsoft has a ways to go. I drew 3 trend lines here for you off the monthly. I kind of fanned them out. 1, 2, 3. Actually, I drew 4. The long-term one is all the way down here. Obviously, we're not going down there. We're not going down here. We're not going down here. But there's a possibility that we go to here. And where is that? Well, guess what? It's right at that whole number 100, correct? So that's probably going to spur some buying interest, I would say, if we can get back to that whole number at Microsoft. Would be a good area to look. Alpha Papa Lima. I don't have a lot of confidence to the downside in this stock. It is obviously so loved. They are going to report along with Facebook next week on the 30th after the market, so make note of that. Facebook and Apple on the 30th, and that has longer term support at the level right about here, about 200, I would say. Right about at the 200 is the channel low, and I wouldn't really think of Apple any lower than that, so that could be interesting. On the Chinese side of things, Baidu Inc., stock I call Bidu because of the ticker. More of a horizontal support, I would say here. The stock's just kind of all over the place. Notice that it did briefly come to 100 here, but it's got all this consolidation as well here, approximately in the 160 area. So that's something I'd be looking at. Again, you want to be kind of timing this with that support in the S&P and in the NDX, and then go, use a top-down approach. Start there with the indices, and then go to these stocks. If you see that, okay, we have that S&P 2500 touch move, say, okay, let me go to my charts. What's Bidu? Oh, wow, Bidu 160. I like that. Et cetera, et cetera. Look, try and tie all these things together. BABA also sitting right on trendline support now, right there, but threatening to go lower. I don't know what will happen to this stock, honestly, if it breaks. I think it is going to break trend because notice that this move here is very clean and very straight up, and that's not going to offer much resistance. So more than likely, you could have a move on the trend line break, probably to about the 105, 110 level, which is going to do the fill up the triangle, so to speak, in that move and take it through this clean area here that, again, I don't think is going to resist very much. And last but not least, I'll show you GS. Head and shoulders in GS. I wanted to end on this stock because I think it's kind of bearish for the broad market as well. Sometimes people say as GS goes, so the market goes. And notice that this head and shoulders pattern could easily be driving prices to here, which is about the 180 mark, which is its longer term trend line on this monthly. All right, hope you enjoyed that. That's all for this week. On behalf of myself and the entire ShadowTrader team here in beautiful Philadelphia, Pennsylvania, as always, I wish you good trading and good night.